So before the break, we were talking about the student loan repayments and that potentially 5 million borrowers are going to be put into collections.
Yes, absolutely. And I think we all know people, whether it be ourselves, friends, family, that maybe borrowed a little bit too much for college. And, it's a widespread issue that faces a ton of Americans. These loans have gotten huge. The interest rates are high. College, just as a whole, tuition is very expensive now. So, yes, this problem is going to be, it's going to affect a lot of Americans, that's for sure. So essentially, the Trump administration is beginning to put millions of defaulted student loan borrowers into collections. And as of right now, there are about 5 million borrowers whose loans are in default. And many of these have not made payments since the pandemic because it was a little bit of relief. They didn't have to. And that is coming to an end now. So, and on top of that, millions more are close to default. This is according to the Education Department. 200,000 defaulted borrowers will begin receiving notices from the Treasury here very soon. So this is an issue. Do you know people with student loans, Kristin?
Absolutely. I mean, friends, family, I'm sure people have kids that take these student loans out. At this point, I feel like it's just a pretty common thing. A lot of people have this student loan debt, and it's been on pause for so long that people have made their budgets work without these payments, especially during COVID times where things were so uncertain and everybody was potentially losing their jobs, put on leave, that sort of thing. So it's tough to restart this and have these payments come back into play.
Absolutely, and I just talked to a client the other day who has outstanding student loans and was not really aware when or if they needed to start making payments again. So that's another problem, is just that people don't really know the terms of their loan, and to no fault of their own necessarily, because it has been it's been back and forth in terms of they're going to get they're going to get forgiven, and then now they're not going to get forgiven, and you don't have to make payments. Now you do have to make payments. So this is going to be, I think, that's going to be a big part of the issue, is just that they will be put into collections just due to the fact that they didn't think they had to be making payments.
Yeah, and so you are considered in default when you don't make payments for 9 months. So these loan providers, they should be letting you know when you're supposed to make these payments, or if your pause has ended, or if you have a payment due. But it sounds like some people might not even know they're supposed to be making payments yet. So we've heard a story about somebody that didn't know they were supposed to start making payments. The only reason they found this out is because they saw their credit score dropping. So that's pretty terrible. So there needs to be more of an effort from these loan providers, I think, to let you know what to expect moving forward, but also just keep an eye on those. So if you do have student loans, just try to check what those repayment options are or the plan, and just make sure you're not going into default on these.
Absolutely. At least make a phone call, because at that point, if your credit score has already dropped, the damage is done largely. You want to try to catch it before that point. So yes, and it's certainly a difficult situation to navigate, as Kristin was saying. You've spent years with that expense not in the budget, that budget line being gone, and it's hard to mold that back in, right? So I mean, things are expensive right now as is. Rent is extremely high. Groceries are not cheap. And now on top of that, the student loan expense is going to have to be added back in. And then, of course, this takes away from consumer spending. The more money going to student loan repayment is less money going into entertainment and just general outings that boost the economy as a whole. So there's certainly some ripples that could occur from this.
And some of the negative side effects of this, so if you are not making your student loan repayments, this could result in not only being sent to collections, but wage garnishment. So that means that your paycheck could be subject to the collections, them taking the part of your paycheck away, and also like tax refunds. So that would be something that you file your taxes, you're expecting that refund, but they just claim it as part of that collection process.
Right.
So it's important things to keep in mind, that this will have a ripple effect moving forward.
Absolutely, and it's important to remember to be smart in general regarding borrowing money, but especially student loan money. There's some things that that can be done in terms of pre-planning. You need to think about, if you already have a loan, making the necessary budget changes to make payments on time is obviously paramount, especially with what's coming here. But beyond that, if you're a person that is considering taking out a student loan, or you have friends, family, children that are about to go into college and going to take out a loan, there's a few things to think about. One of which being go to community college first. That's what I did. It's very, very cheap, especially if you're a resident of the state that the college is a part of. That will really, really make a difference. You can save a ton of money. I think I spent something like $900 a semester for community college. So yes, very, very cost effective. That's one thing that can be done.
Right. And then you can live from home too.
Yep.
So you can go to school, live close. You don't have to pay the housing costs. So that really is a great option.
Right. And if you're not going to go to a community college, the next best thing would be at least go to a public state school in the state in which you were resident. That's what you did, Kristin.
Yep. Went to UCF right down the street from here. So loved it there. But yes, it is more affordable than going out of state or something along those lines.
Absolutely. Much, much more affordable, and even on-campus living is a lot more affordable at that type of school. I live, but the office is also located near Rollins, which is a private school that is extremely expensive, beautiful school. But yeah, that may not be, if you're going to take out a big loan for college, that may not be the best location. So just think about things like that. And then, of course, also pick a degree and career field that you think you may be able to get the best return on investment from, right? So maybe that's a business degree, that's some sort of STEM degree. It doesn't necessarily matter in that sense in terms of exactly which degree. Just make sure that you have a plan, that you think you can get a job that's going to pay relatively well outside of college, and you have the ability to pay back these loans. It's something that not many people think about, especially because you're usually 17 or 18 years old when you're taking out these loans, but it's certainly something that needs to be considered.
And then everybody can kind of do this, just planning ahead. So there are many vehicles that you can use to help pre-fund college expenses. So a great one is the 529 college savings account. There's also prepaid plans. So the 529 account is a tax advantage plan that if you put money in it, your contributions can grow tax-free and come out tax-free if they're used for education purposes. And it has a wide range of uses. So you can use it for tuition, you can use it for housing, you can use it for books, computers, anything along those lines. The other great benefit of a 529 is you can start it when the child is born, and it can grow for the 18 years until the kid goes to college. Additionally, you can kind of transfer it between kids. So if you've got two kids, one doesn't go to college, one does, you can transfer one to the other. There's also this new provision that if the child goes to college, has some leftover expenses in the 529, you can actually roll over up to $35,000 of that 529 into a Roth IRA for the child. So great flexible benefits with the 529. We are huge fans of them here. We open them all the time for a lot of our clients, and they really do have a lot of flexibility and benefits.
Right. Now, that's a powerful tool, especially with the new provision on rolling it into a Roth. It makes it very, very flexible. Many of our clients either have one for themselves or have opened one for family, children, grandkids, that sort of thing. We recommend them. We recommend them greatly, as well as, and then there's, of course, the prepaid plans that have been popular for a very long time. Essentially, you're just locking in today's tuition price, and the tuition inflates the same way rent does and everything else. So you're paying for it today, locking in today's price for a future date. Those are good as well. And if you have any questions regarding budgeting, or especially 529 plans, anything like that, we are always here to help. We talk to clients all the time in terms of budgeting, student loan repayments into their life. They come in with oftentimes they're in a very good financial situation other than the loans hanging over their head, and that needs to be dealt with, and we talk about that all the time. So yes, that's a big thing coming here pretty soon that will need to be considered by anybody that has a student loan. And this has been Chet Cowart and Kristin Castello with Nelson Financial Planning on Dollars and Cents.